The demand for the British currency has also started to decline, but the GBU's pair still needs to prove its seriousness. I'm referring to the 38.2 Fibonacci level. A successful attempt to break through this level will confirm the market's readiness for sales, which, in light of the impending rate cuts in the UK, seems very logical. However, it will all depend on the market itself. In recent months, it has shown no desire to sell the pound. Undoubtedly, this cannot continue forever. Sooner or later, sales must begin. This week, the Bank of England held a meeting, but its results disappointed many sellers. Although the pound still anticipates a policy easing by the Bank of England and is gradually declining, the market was hoping for at least a stronger dovish sentiment from the MC. The most important thesis announced by the Bank of England was inflation has fallen to the target level, but it is now important to ensure that it remains at this level. The second important thesis was we expect inflation to accelerate to 2.5 in the second half of the year. Based on these two theses, it becomes clear why the BOE did not decide to cut rates in June. If your forecasts indicate an imminent rise in inflation, it is indeed better to wait with the decision to shift to a more dovish policy. The Bank of England also noted the core inflation rate, which is currently at 3.5. The official statement said that this is too high and requires further slowing down, however, by August 1. When the next meeting will be held. The Bank of England may still be ready to start easing policy. Based on this, I believe the moment of truth for GBUs has arrived. The pair now has only a small window of 2-3 months, during which the Bank of England is expected to begin easing, while the Fed is not. This should be enough to drop to the 23rd figure, where wave 3 or C and the entire downward section of the trend can be considered complete. Undoubtedly, I was counting on a more significant decline in the pound. But the market in 2024 has shown that it is only willing to sell the pound in cases of extreme necessity. The Bank of England also expects an acceleration in economic growth and a slowdown in the labor market in the second half of the year. However, this data is now practically irrelevant for the pound. The main focus remains on inflation.